Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good Tuesday morning. It is June the 18th, 2024. If you're listening during the live version of the show, which is 8 a.m. Central Time, 9 Eastern Time, our phone lines are open and you can get your call queued up, 610-363-1110. If you're listening at another time, well, you can still call in. Just do it whenever the show is live. You can go back and listen to all of the past episodes of the show by getting our phone app at on your smart device or your TV, where you can watch or listen when it's convenient for you. But however you're tuning in, we're glad that you're tuning in today so that you can learn how to be a biblically responsible investor, to defund darkness through your investment strategy, and to be encouraged to be an obedient, joyful, and generous giver. We call that funding the light. So we hope that you are a partner with us. It's very inexpensive to do so. It's $132 a year, and you can find out more at financialissues.org. Now, if you are a partner, make sure that you tune in tomorrow for our monthly partner conference call. It happens at noon Central Time, 1 Eastern Time. And if you're a partner, you should have already received an email alerting you of how to dial in to that partner conference call. If you're not yet a partner, it's not too late. You can become a partner all the way up to the time of the conference call and still be able to call in at noon tomorrow. Just once you become a partner, go to the conference call tab on the partner page and you will be able to access that information as well. Well, our stewardship verse today comes from Proverbs 4:23. Above all else, guard your heart, for everything that you do flows from it. Seth, what are your thoughts?
Yeah, this is a good one, Shana. I mean, all of them are good. It's the scriptures, but this especially, I think, is relevant for us today. You know, there's nothing more important for anyone than the condition of their hearts. You know, the condition of our heart tells us who we belong to. Do we belong to God or not? And if our hearts are pure, if we're obedient to God, if we belong to Him, then our actions are going to follow. So the result is we'll treat our spouses better, we'll love our kids better, we'll work better in our jobs, and I think also we're going to honor God better with our money, to kind of bring it back to our topic here at Financial Issues.
Yep.
Yeah.
Everything centers around stewardship that we talk about here. So, you know, the scriptures in Jeremiah tell us that our hearts are prone to deceit and are wicked. So,
they sure are.
You know, just like little children are prone to mischief. And I know that you and I can both attest to that.
They sure are. It took Josiah about 2 hours to go to bed last night. And so, yes, amen.
Well, one of mine was still up at 4 when I got up this morning. So.
There you go.
I guess it's
Yep.
So, you know, we, just like children, are prone to mischief too, and we all want to be the Lord of our own lives. Our hearts are being pulled upon and wooed away by the shiny things of this world. So we must guard our hearts from following after our own desires. And it takes work to keep our focus. This world will offer its own wisdom. All we have to do is hop on social media for about 2 seconds and we'll be offered plenty of opportunities to see what the world says is true wisdom. But we must be diligent to look to God's word, because God's word is the only thing that offers us true wisdom. Chasing after the world's wisdom will only get us what the world has to offer: money, power, things that seem appealing to our human flesh, but those things have no lasting power to satisfy the soul, and we'll continue to look. So we have to train our hearts to focus on God's wisdom, because that will bring us joy, peace, and true contentment.
It's good stuff, Shana. You know, I was thinking this concept of guarding our hearts. it really does have everything to do with our investing. And so kind of as a topic for today, both as kind of a teaching moment for our new audience as well as some review for our old group, is this idea of values-based investing, investing based on the things that you love or care about most. And we're kind of comparing here the biblical approach to the worldly approach. So there's a recent study that came out from Morgan Stanley this past year, actually, found most young investors are very interested in what's called sustainable investing, Shana. 84% of U.S. respondents said they're interested in this. 96% of millennials, 91% of Gen X, 58% of investors saying they're likely to select an investment professional based on this professional's sustainable investing offerings. So I have a quote here. Financial returns are the main priority for individual investors. More than 70% believe strong ESG practices can deliver them. More than 60% of investors are concerned about greenwashing risks, on the other hand, and the lack of transparency with ESG data. So we're seeing something that's pretty clear here, Shana, obviously. But my question for you to kind of start, why do you think values-based investing is so popular among kind of the younger investors of today's generation?
Well, I don't know if it's just the younger investors. I mean, I know this study focuses on younger investors, but I think people in general are purpose-driven, and that's because we were made that way by our Creator. Everyone wants their lives to have meaning. God made us that way. I mean, how many stories have you heard of, or how many situations do you have firsthand knowledge of where people who have everything, yet they're still miserable? If you have no idea what I'm talking about, go read King Solomon's writings. Right. You can get your first experience right from the Bible. But, we desperately want our lives to have a noble purpose. I think where, and this can be good for us, here at this ministry, because we've been called to minister to those who want to answer to a higher calling, who want to honor God in the way that we invest. So values-based investing is a good thing. You just have to make sure that that you have the right values first and foremost. Right. And also I think part of this is because making profits has really been demonized by, so many in power, in political power. You'll hear recently, or you hear the current administration demonize the oil companies for making a lot of profits. They'll demonize corporations, saying that they're not paying their fair share. They'll demonize the rich, saying that they're not paying their fair share. When secretly, I believe, the powers that be really want to be the ones who are in control of those profits and redistributing the wealth. Yeah. That's another conversation.
Yeah, absolutely. No, it's really good stuff, Shannon. Just as a follow-up for that, how do you think, and maybe it hasn't changed, but it kind of seems like based on those numbers that we just read, the trend has been younger generations at least give lip service to, maybe they really are, they seem to be more interested in the ESG stuff. Has this changed from the previous decades, you think? And if so, how has it?
Well, biblically responsible investing has been around for 3 decades, right? But this whole ESG movement is something that's fairly new, I would say, in the last decade or so. So it's really something that's had increasing awareness or increasing attention put on it. But, here's a deeper question to ask, I guess. Did the culture change the values of corporate America, or did corporate America change the values of how did corporate America change the values of how corporations deploy their resources? I mean, it's kind of hard to say. It's kind of like the proverbial question, what came first, the chicken or the egg? That riddle has puzzled many throughout the generations, where
whichever one God created first is the one that came first.
Yeah, you stole my thunder there.
I'm sorry.
And there are seemingly logical arguments on both sides if you're debating which came first, the chicken or the egg. But, if we go to true wisdom, the creator of all things, since there was no human eyewitness actually to creation, the answer is simple. God created chickens first. But
there it is.
We're not trying to settle that question. We're trying to get to something deeper, but I hear the music. That means we've got to take a break. So we're going to take a pause. We're going to come back, and we're going to finish up this discussion on values-based investing. So we hope that we grabbed your attention and that you're going to stick around, because we're going to take this break and then come back with more financial issues.
I'm John.
I'm Debbie, and we're Samaritan members.
We have 8 children, ages from 30 down to 15, and we have a ministry called Family Man Ministries.
When he left the pastorate to start the ministry, we had no income for about a year potentially, and so we were living on almost nothing. The cost of health care seemed impossible because we had a big family. And so when I started researching ministries, there was no comparison. It was just the best deal. And so a year after we joined, my 10-year-old daughter at the time got pneumonia, and it was scary. Someone sent a card just to Maggie, and it said, not just that we're praying for you, but that God will always take care of you, and here's $5 for you to go out and get ice cream. It was just really special.
To make that connection, that's an amazing thing. I was sold on Samaritan Ministries. I just thought, okay, I'm a part of this.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Folks, welcome back to Financial Issues. Hey, if you missed that last segment, listen, we established something profound and historic here, that indeed the chicken did come first in that question, Shana, right? What
Genesis.
came first? Chicken or the egg? The chicken came first because God created the chicken. That's right. God was the establisher of it. Shana, this has been a really interesting conversation as we've been talking about values-based investing. And we were kind of ending off there in that last segment about kind of how the culture has sort of changed a little bit over those last few decades. What do you think the source of it is, Shana? Is it corporations? Is it individuals? What would you say?
Yeah, so the moral fabric of the country has certainly changed.
Yeah.
We are a nation that was founded on Christian principles, whether, the history books still confirm that or not.
Yeah.
in some places, we are a country that was founded on religious freedom and the belief in God. I mean, just go and read our founding documents. That's another conversation for another day too. But the way that values-based investing came about is that, the left approached corporate America because corporate America had the money. And they went to corporate America and said, you need to fund our agendas. It started kind of with, there were some noble things that they went to corporate America for, like, fighting for equal rights and things like that. But then it turned into much more sinister kind of things. You need to support diversity, equity, inclusion. You need to fund our gay pride parade. You need to fund Planned Parenthood clinics so that, people can go and get abortions on demand. And if you don't, we're going to say that, you as a company are bigots, that you are against these things that people want. And so the corporations didn't have a backbone, and they caved, and they started giving money to these causes. And now these causes have been funded. This dark agenda has been funded by corporations, and it has infiltrated our culture in a big way. They have targeted our children. They have said you don't have to listen to what that old antiquated book says about your gender. You get to pick your own gender. You don't have to listen to what that old antiquated book says about marriage and family. You get to love whoever you want to love. You get to, defy the science. Don't worry about the science in this case, because you get to be your own decider of all of that. And so, our country really is confused now about what values are. So there is a difference between the value set in ESG and the whole value set with BRI.
And Shana, that kind of leads to my next question. You know, what would you see as some of the big problems with ESG investing? Because obviously there's a difference, and it seems pretty clear to me that one is finds its source in one thing and another finds its source in something very different. What would you say to that?
Yeah. The biggest problem with values with ESG is the values that it promotes. So E is for environmental. Environmentalists don't worship the creator, they worship the creation. So they believe that their goal is to save the earth. Well, does that sound a little bit familiar? You know, Jesus' mission was to come and save the world, to save the people of the world. So Jesus' focus is on saving people. Environmentalists want to save the world. And by the way, the Bible has a lot to say about what's going to happen with the world in the future. And guess what? God is still sovereign, and human beings can't stop what God says is going to happen. So, you know, to save the earth, people need to be reduced. So part of that agenda, things like abortion, euthanasia, those things are embraced in the name of population control to keep the world from being overpopulated and destroyed. Social justice is another thing that is pursued by ESG. So corporations are solicited for money to support evil agendas, you know, and they're cloaked in this higher calling of equity, diversity, and inclusion. So, you know, even if you would never personally support abortion, if you would never personally support pornography or any anti-Christ agenda, anti-family agenda, anti-marriage lifestyles, some of your money does get directed in those areas because it is controlled by corporations and the corporations that you invest in. So, instead of making investments into the kingdom of light, allowing you to make those investments, to you to direct where your money is put from a philanthropy standpoint, corporations are making those decisions. So those investments also have return. Investments in the kingdom of darkness have the kind of return that we see in the world, the spirit of death that we see embraced in the practice of abortion. You know, the end of procreation with the LGBTQ agenda, since 2 men or 2 women cannot beget a life. And, you know, we have corporations forcing this tolerance and acceptance of these alternative lifestyles, alternative because they are alternative to what the Word of God says, and they turn it into even a celebration of those alternative lifestyles.
Shana, that's really good. And folks, I hope that we can see here, it's not just with our investing, it's with every area of life. Oftentimes, the spiritual attack that we see, Shana, I find is really the danger in it from the enemy is that it's a cheap knockoff of what the real thing is. So it's similar in some ways. Like you can see maybe there are some values in ESG investing. The problem is they're not values that are based in Scripture, but they're based at best in human reason, which really finds its source in satanic doctrine. And so we really have to be on guard against this, not just with our finances, but in every area of life, for sure.
Yeah. You know, Satan would have you worship anything except God. He would rather anything. And even those that would discount biblically responsible investing using maybe what I believe is a false narrative, you're going to get inferior returns if you do biblically responsible investing. And if I make more money, then I can give more money. You know, they're placing a higher value on profits than what they place on purity and obedience. And by the way, I don't believe that you get inferior return, that you necessarily get inferior returns if you're doing biblically responsible investing.
It's good, Shana. So, you know, speaking of biblically responsible investing, again, for our new audience that we're kind of getting here, we were using this term a lot. What are the values of biblically responsible investing, and how do they stand out against the other types of worldly investment models?
Well, we value what God values. We value life, so we don't invest in companies that make chemical abortion drugs or those that support abortion clinics like Planned Parenthood, or those who push pro-abortion agendas by saying, well, since Roe v. Wade got overturned, we're now going to give our employees if they live in a state that doesn't allow abortion anymore, we're going to give them $4,000 so that they can travel across state lines and kill their babies. We value marriage the way that God defines it, one man, one woman for life. So we don't invest in companies who are using God's money, the money that investors have invested in the company, to say something different, like it's okay just to love who you want to love. I mean, I have no idea why corporations are spending so much time discussing people's private sex lives at work. I mean, it's totally inappropriate, you know?
Yeah, it absolutely is, Shannon. It's a really good reminder there. You know, we get questions a lot, you know, about kind of investment opportunities with companies that appear to align with us in terms of conservative values. In fact, I think we talked about this last week with a particular stock that was getting ready to go public. What words of wisdom and maybe even warning would you give folks who just want to find the next good conservative business to invest in, but it might not be a biblically responsible business to invest in?
Yeah, I mean, you have to decide what's important to you. You have to decide which values you want to invest in. And so we're not looking for Christian businesses. We're not looking for, you know, Hobby Lobby and Chick-fil-A are both private businesses, but we're not looking for companies that are necessarily outwardly Christian. We just want companies to stay out of the culture war. You know, corporations don't have souls. Human beings have souls, and we're going to be held accountable for what we did with the time, talent, and treasure that we have been trusted to manage. We just want corporations who are going to adhere to their fiduciary responsibilities to generate value for shareholders, to use the resources of the company, the human resources, the money invested, to run a good business, to operate in excellence, and stay out of the culture war.
Last question here, Shana, for this topic. Why is BRI better than the other methods of investing? You touched on it a little bit, but...
Yeah. Well, it gives God his rightful place when it comes to investing, and that's first place. God deserves first place in all of our decisions, including our investment decisions. We can't compartmentalize this. We can't justify it away. We need to do whatever we can. And, you know, with knowledge comes responsibility. So I'm sorry if you're hearing this for the first time and you're like, man, I really love my Apple stock, or I really love my Amazon stock, you know, and I don't want to get rid of it, so I'm just going to turn the channel right now. Well, I can tell you it's too late. God's already planted the seeds in your heart. And I would just commit you to encourage you to commit yourself to prayer to find out, you know, how important this is and how you can do it. So
great stuff.
You can do it
Shana.
easily just by following our strategy. Yep. You can build your own biblically responsible portfolio. You can use, if that's not your thing, if you don't want to handle the day-to-day management of it, you can follow our mutual fund and ETF strategy. That's a little bit less hands-on. It's still a way for you to do it on your own, to be sure that you're going to be biblically responsible, but to have fewer individual decisions on how to put together the portfolio. Or if you're going to go it alone, you can still use one of the free resources on our site called the Evaluator. That's a screening tool where you can just go to financialissues.org, click on our resources tab, go down to Evaluator, and then you just have to put your email in, and then you can type in the ticker symbols for your individual stocks, ETFs, or mutual funds, and you can find out right away if any of the companies that you've invested in or violating any biblically responsible screens. And then you can keep listening, you can become a partner, and you can find out how to clean up your portfolio if your heart is so convicted.
Great stuff,
Well,
Shanna.
we don't have time to get into any of the market information, the economic information. And I would just say that if you're listening to a short version of the show and you're really interested in that kind of thing, hop on over to financialissues.org or get our phone app. Or you can listen on any of your favorite podcast outlets, Apple or Spotify, and hear the full version of the show. So for those of you who have to leave us, we wish you a good day. We hope that you'll come back tomorrow to hear more about biblically responsible investing and good stewardship decisions. And for the rest of you, we'll take a short break, but we're going to come back and we're going to talk about more financial issues. So don't worry. Hi, this is Shana Bird, the host of Financial Issues. The Financial Issues family is so blessed to have saved tens of thousands of babies, all thanks to the generous support of you, our listeners and viewers. For $140, you can sponsor 5 ultrasounds. Please go to preborn.org, that's preborn.org, or financialissues.org and click on the Preborn logo. Save a baby, save a life.
Here at FISM News, our mission is to provide you with news from a source you can trust.
The news is a constant reminder that this world is not our home. It is marred by sin, resulting in wars, brokenness, and divisiveness.
Jesus promised that he will return soon to judge sin and make all things new.
Until then, we place our hope in him.
This is the good news, the most important truth we feel compelled to share.
One of the emphases of preborn has been ultrasound in 2 ways. An ultrasound machine if a pregnancy clinic doesn't have one, and then an ultrasound session, which we underwrite hundreds of thousands of those. We've seen over and over again the dramatic results that when a woman encounters her baby for the first time and hears that heartbeat, she realizes the magnitude of what's happening here, that there is somebody else, that's her baby. So this is why preborn pushes out ultrasound as much as we possibly can. Preborn has seen over 200,000 babies saved, over 59,000 people come to Christ, populating earth and eternity, life for this life and life forever. Save the baby's life, but save the mother's life so that she can lead that baby to Christ. If we're bringing people into this world and the mother doesn't receive Christ and the child is born and the child lives its life and doesn't receive Christ, this is not a good end. And so we have to have the gospel as part and parcel and really the heartbeat of what preborn is.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. Thanks for hanging with us today. We're so glad that you're here. Our phone lines are open. If you've got questions, give us a call, 610-363-1110. That is if you're listening live. Also, reminder, we're having a partner conference call tomorrow, noon Central Time. You should have gotten an email already with the details. If not, just check out the website on the partner side under conference calls. You'll find the dial-in information right there. Well, let's take a look at some financial issues. The markets yesterday, the S&P and the NASDAQ reached all-time highs during the session and closed at records. The 30-stock Dow advanced about half a point to end 4 days of losses, but it's not quite at a new high. So the Dow was up about 0.5%. The S&P closed up about 0.75%, and the NASDAQ almost 1%. So where are we in this bull market cycle? Well, since October of 2023, the NASDAQ composite is up almost 42% since Monday's close. The S&P has climbed almost 33%, and the Dow right at 20%. So FOMO, or fear of missing out, is the reigning emotion in the markets today. I would suggest that you don't get caught up in fear, whether it's fear of loss or fear of missing out. Just use caution and be prudent right now. So you'll notice that our buy list is a little bit smaller than usual. That's because we're using caution right now.
Yeah, absolutely.
Well, the pre-markets hovered around the flat line this morning, and they have opened in the same vein. So the Dow is unchanged this morning, right around the flat line. The S&P and the NASDAQ are barely in positive territory. I know that we got some data out about retail sales this morning. Did not get a chance to dig into that. Maybe I can get to that tomorrow, so make sure that you tune in.
Yeah, it's awesome. And Shana, I did see a headline here. Thought this was interesting. I'd love to get your thoughts on it. One of the Fed presidents, the Minneapolis Fed president, actually, Neil Kashkari, I hope I'm saying his name right. He said earlier this week he predicts a reasonable prediction that the central bank will cut interest rates once this year, and he said it'll likely happen in December. So, Shana, I wanted to get your thoughts on this because I know we've talked a lot about how we actually think the Fed is likely going to cut rates before the November election. Why do you think the Fed elites themselves have a different opinion of this?
Well, I mean, he's just kind of regurgitating what was said at the press conference and what's reflected in the summary of economic projections that the Fed put out. But, one of the reasons that I think that they're going to do it this year is they've already telegraphed that they would. Yeah. Any indication that they won't do it this year will totally rock the markets. And that happening right before an election is a job killer for them.
Yeah.
They are unelected bureaucrats that are appointed by the current administration. And, the Fed is really between a rock and a hard place because if they lower rates or use their other tool to increase their bond purchases, they're most likely going to create more inflation, the inflation that they're trying to get under control, and that's going to hurt the little guy that they pretend to help. Now, if they don't cut and they don't continue to pick up what the Treasury is putting down, namely more debt for more government spending, then their jobs could be in jeopardy if the current administration is replaced or if they don't go along with the narrative. Now, officially, the Fed is apolitical, meaning that they don't have opinions on what's happening politically, and that they're not influenced by political parties. I don't envy their position of power at all. It seems that no matter which decision that they make, we're headed down a path toward financial destruction. And, I say that knowing that that may spark fear in some people who have become so accustomed to and comfortable with the way that God has chosen to provide for them up to this point, comfortable with their, Social Security, their retirement savings, the market's doing well, all of those things. And, I don't pretend to know the timing, but I believe what the Bible says will happen in the end times. I believe that will happen. That what the Bible says is true, and it will happen. That eventually we'll end up with a one world government, with a one world currency, and one world religion, and that the Antichrist will sit on will rule and reign in the earth. And in order for that to happen, there will need to be a complete destruction of the current world system. Not necessarily that I think that all of these people are evil, but I think that the evil one is influencing people and agendas, so that these things will happen, and that God is allowing it because he's already predicted it. So, eventually that regime will be defeated and replaced by King Jesus, who will return for his people. He will win back control and reign for eternity. So don't lose hope. Don't be scared by what's happening in the world.
Good promises there. Shannon, we got a couple questions that came in on social media here. I understand we got Adam from Virginia is asking, saying, I understand it's best to purchase stocks and ETFs when the market is open since mutual funds only settle at the end of the day. Does it matter if you buy mutual funds in the pre-market? What do you think?
It doesn't matter because, if you buy mutual funds either after the market closes or up time for Eastern time, you're going to get the closing price of the mutual fund. So it doesn't really matter when you put your order in.
Awesome. Timothy from Ohio up next. 64, his company has Charles Schwab, and he has FI70. He's looking for a replacement since it was a sell. Is FI68 or FI55 the best if he can purchase it under his 401k? What do you think?
There's some guidance. There are some things. We have a fixed income sector and we have a fixed income buy list. So most 401k plans limit your investment options. So you only have certain things that you can pick from. So money market or a stable value fund is probably a really great alternative. And as long as it's paying around 4.5%, 5%, which most of them are right now, if you can buy those two that he mentions, FI68 or 55, in your 401k plan, which is probably not a high probability, but if you can, then I think that those things would be good to purchase. If you can do ETFs, I believe it's ETF. I'm sorry, I believe it's FI3, maybe, that is a fixed income ETF that you might be able to purchase if you can get individual stocks.
Yep. Good stuff, Shannon. We got another question came in from Steven in Oklahoma saying, is a fixed income ETF, speaking of ETFs, preferable than a CD? Because the ETF can be quickly bought and sold and redeployed to do something else. What do you think?
I guess you could make that argument that maybe it's a little bit better, but some of the ETFs, some of the shorter term ETFs have rates that are comparable to CDs right now, but we do still have that recommendation in there for a CD ladder because you can lock in those rates for a longer time period, maybe up to 2 years, because when the Fed does start to cut, we're going to see those rates drift downward, and having a CD ladder can help extend those higher rates. Well, I think it's time for the Ag Report. So we're going to have Craig Haugaard. He's going to come in and tell us what's happening in the agricultural and commodity markets for those of you who are very interested in that kind of thing. After Craig, we're going to take a short break, and then we're going to be back with more financial issues. If you've got a question, call us 610-363-1110.
This is Craig Haugaard with your Financial Issues Ag Update for June 18th. Well, corn was the weather story yesterday as better than expected rains in the western Corn Belt over the weekend pressured prices. After the close, the crop conditions report came in at 72% good to excellent. That was a bit lower than expected. The hot, dry conditions in the eastern Corn Belt are also starting to raise some concerns. On the demand side of the equation, export demand remains good, and improving ethanol margins should keep domestic demand solid. Yesterday's close had July corn 6.25 cents lower at $4.43 3/4 per bushel. Soybeans featured the largest May crush numbers in history. Weekly export inspections in line with expectations, and a crop that slipped down to a rating of 70% good to excellent. Now, in spite of all this relatively bullish news, the trade was focused on a weather story that looks favorable for production, so down the prices went. July beans were 22 cents lower at $11.57 3/4. Harvest progress and a lack of demand pressured wheat prices once again. At the closing bell, Minneapolis July wheat was 18.5 cents lower at $6.47.5. Kansas City dropped by 22 cents to close at $6.05.5, and with Chicago 21.25 cents lower at $5.91.5. Cotton futures continue to slump as they set a new life of contract low. At the closing bell, July futures were down 103 points as they ended the day at 69.94. Livestock futures were mixed. August live cattle were 37.5 cents lower at $182.80 per hundredweight. August feeder cattle were 65 cents lower as they closed out the day at $200 $161.32.5 per hundred. And our August lean hog futures were $1.42.5 higher, ending the session at $91.87.5 per hundredweight. The Class 3 milk futures are repeating a pattern that we've seen 3 times since mid-May, where they go up, establish a new life of contract high, and then sell off. We made a new high on June 14th and now seem to be in the sell-off phase. Yesterday, July futures declined by 50 points as they settled at 20.17. Well, this has been Craig Haugaard with your Financial Issues Egg Update. We'll be right back with more financial issues after this.
If anybody's listening, thinking about joining, there's nothing like it. It's been great. I have peace of mind. I feel confident continuing to work. There's just a lot of things that y'all have added to my financial peace.
You guys are the man. So I encourage everybody, partner, get in there and watch the videos. Portfolio after portfolio, you hear the stories. It works. And you guys make it possible. And I thank you for that.
Married couples or even engaged, as you're coming together, working on your finances, God has blessed us incredibly. And it's been incredible to see what he's done in our lives. Just want to thank you, Financial Issues.
As a novice investor, which I am, and I'm certainly learning so much from y'all. Thank you so much. Y'all take the fear out of it. Then my portfolio is just doing great.
You've really encouraged us, and I know you've probably encouraged so many others as well.
Become a partner today by simply going to financialissues.org/join. Click the green button to become a partner. That's financialissues.org/join.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay or to go, to remain the same or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common, the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. It's the home stretch of the program. You still got time to get your question in. Call us, 610-363-1110. Now you're going to need to get your call queued up in about the next 2 minutes if you want to make sure that you get an answer today. So 610-363-1110. While we're waiting for a call, let's get to some of these partner questions.
Yeah. Good stuff, Shana. This first one comes from Ron. Interesting question here. He's wondering, referring to a Timothy Plan ETF prospectus from last year. It was May 2023. There's some language in it that he's just kind of unsure about, Shana, particularly as it applies to ETF 7. And he was wondering, just for some guidance on this, wondering if this means certain Timothy Plan ETFs might be off limits in terms of BRI investing. Do you have any advice you can give here for Ron?
Yeah, so I can assure you that Timothy Plan is 100% committed to screening for biblically responsible investing. They are the pioneer. They've been around. In fact, they're celebrating their 30th year in existence this year.
Yeah, happy birthday, Timothy.
Yeah, happy birthday. They are very equally yoked with us. We are both put a very, very high priority on screening for biblically responsible. But essentially what this is saying in the prospectus is that, you know, if you restrict the number of companies in the universe of what you can pick from by screening for biblically responsible activity or non-biblically responsible activity, then you could be creating a higher risk type of investment than if you didn't restrict at all. So it's basically, you know, prospectuses are written by attorneys and they're, they're highly regulated. They are, most people don't read them. So kudos to you, Ron, for actually, actually reading it. But, they lay out the risk and the expectations that investors can reasonably have when they invest in these types of investments. So it's just letting you know that by screening, that can introduce a level of risk into the portfolio.
Good, Shannon. Let's stick with Timothy Plan as our theme here, because Robert also has a Timothy Plan question. He says, when you updated my Timothy Plan asset allocation model, am I to rebalance the account to that new model or just update the model when making future purchases going forward?
Yeah, that's a great question. Well, if you are adding to your positions and you are only off a little bit in the sectors, then you can address that with new money that's coming into the portfolio. If you are not adding new money in and maybe you have greater imbalances, then you should go ahead and reallocate your entire portfolio.
Good, Shannon. Brad is up next. Brad's 55, and he has $30,000 of profit in TE91. He says, should I sell shares and capture all that profit? Should I leave in the money market, buy other stocks with the profits, sell shares, capture profit, buy more since it's split? A lot of options for Brad. What do you think?
Yeah, that's great that you're up that much in one particular stock. And so, you shouldn't look at it every day. Like you shouldn't try to take profits out every single day. But what I would say is that if you haven't already sold off some of that particular position in the last 6 to 9 months, then you should trim your holdings back to about 3% of your entire portfolio.
Yeah, I'd be curious to know what that 30,000 profit would mean for his percentages in his portfolio, Shannon. That's good.
Yeah.
Yeah.
He's got a couple of other questions. What should he do with it? Buy other stocks, leave it in money market. I would not be opposed to, depending on how much cash it creates in your portfolio, I wouldn't be upset if you stayed a little bit heavier in cash for the time being. The markets are very frothy right now. There's a lot of arguments that the bull market can continue. The biggest argument in my mind is that there's $6 trillion of cash on the sidelines ready to go into the markets. And, there's all of this fear of missing out. So, that could drive the markets higher. But at age 55, I wouldn't be opposed. I wouldn't say sit in cash if you're more than 20% in cash right now. I would say redeploy that. But if you're at, 10 to 20% in cash, it might not hurt, gathering that 4.5% to 5% in money market while you wait for a breather.
Yep. Good, Shanna. Zach is up next. He's got 2 questions. We'll start with his first one. I've seen many comments and memes online attributing inflation to the greedy corporations, massive profits, price gouging, etc. Could you please explain, Shanna, why this seemingly logical correlation is untrue and how to argue against this misleading claim? And then why is it that profits and stocks are high in such an inflated economy? It's a good question.
Yeah, shrinkflation, right?
Yeah.
That's one of my favorite clips to watch. But, these things that are happening, the shrinkflation, the politicians pontificating about price gouging and things like this, this is all gaslighting and finger pointing. The main cause of inflation has been out of control government spending. And that's happened on both sides of the aisle. We've just, we had a crisis, the COVID crisis. It was unprecedented. Politicians responded the best way that they knew how, in actually giving aid to the American people, but it went too far and it hasn't stopped. Congress is still spending money like we're still in a crisis, even though even Biden himself said that the crisis of the pandemic was over, but the spending hasn't stopped. So that's what's really causing all of this. And, it's just the powers that be don't want to take responsibility for the real reason for inflation. The reason that there seems to be a correlation is because, corporations, equity investing is the antidote for inflation, because what happens is that, you're investing in companies that are charging more money. As inflation goes up, they have to raise their prices. And so, you're participating in that cycle a little bit, but, that's the real reason, is because politicians that have authorized this out of control spending are to blame. And we will be to blame if we don't kick them out of office or hold them accountable and make them become fiscally responsible.
Yep. And Shana, of course, understanding we operate within the sovereign plan of God and we're always upheld by him, I just can't see an easy ending to this. Am I correct in that? Like, something's got to break here, right?
Yeah, I'm with you.
Yeah. Zach has a second question here, Shana. He says, I was a public school teacher fired during the shamdemic. He says, my state PERS account has been inactive and no contributions have been made since my termination 3 years ago. However, the account has been gaining interest at an annual rate of almost 8% and has a balance of just over $18,000. Should I withdraw the funds and put this money toward a different retirement plan, or just let it sit until the 2055 target date? What are my options here?
Yeah, so, there's a lot of considerations to that. I would find out, how long you can expect that rate of return to continue. But Zach is saying that he's 35 years old. So, 8% is a good interest rate. And, Zach, if you were older, if you were closer to retirement, I might say, maybe lean more towards leaving it there if that rate is realistically expected to continue. But, the historical rate of return for equities and other types of investments is greater than 8%. Now, there's no guarantee that history will repeat itself. Past performance is no guarantee of future results. But, I think that you probably could achieve a higher rate of return if you had the opportunity to roll it into a self-directed account. You could become biblically responsible.
Yeah, awesome, Shana. Brandon's up next here, 23 years old. He has just a nice comment for us here. Thought he'd mention that partners may want to update their portfolio trackers if they're holding a stock that splits. He references TE91, which we mentioned earlier, temporarily made his portfolio tracker look off. So he says, for example, if you owned 1 share and now own 10, it would make it look like you bought 1 share for 10 times the current share price. All that I needed to do was update my number of shares and cost basis, and it fixed it. That's good stuff, Brandon.
Yep, that is a good point, Brandon. So TE91 did recently do a 10-for-1 split, and so the number of shares that you own needs to be adjusted. The share price will just update from the ticker symbol, but that will, update your cost basis there. I don't really use the tracker for cost basis tracking, but the tracker is a manual input. So anytime that you're going to look at your tracker, you just need to compare what you have in your brokerage account to what is showing on your tracker. Make sure that all your positions are there, that you have the right number of shares accounted for, because if you don't, it's going to skew the output. So great place to start and great point. I'm glad that Brandon brought that up.
Yeah, that's awesome. And it's great to see Brandon starting at such a young age, too. He's 23, so that's awesome.
Absolutely.
Good job,
23 years old. That's amazing.
Yeah, it's good.
Well, I hear the music. That means we've got to go for today. So we hope that you enjoyed the program. We hope that you gleaned some wisdom and that you're more and more convicted to honor God in the way that you invest and in your giving. And we just encourage you to tune back in tomorrow, because Lord willing, we will be here to remind you time's getting short. The Master is coming back. There's going to be a test, and we want to help you be found a good and faithful steward when you answer the questions about how you handled the time, talent, and treasure that you are trusted to manage. Tune in tomorrow for the partner conference call and come back tomorrow for more financial issues.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.